Hello, welcome to, not PSR, that's the other show I do. Welcome to the Stock Out. We're off to a good start. Welcome to the Stock Out. This is a show about CPG and retail here on FreightWaves. I'm Mike Baudendistel, joined by Grace Sharkey. And today we're going to talk a little bit about retail AI, retail sales, inflation data, and then we're going to interview Josh Bouk, Chief Partnership Officer of TriumphPay. And yeah, you wrote an interesting article over the weekend that I was reading. You want to talk about that?
Wait, which one? Over the weekend?
I thought so. I thought there was one the other day that you wrote on. Well, we can just move on to the topics.
No, you're good. You're good. Go for it. It's Monday, we're just slowly getting into it today. That's what the audience is getting used to. We're here though. We got this. So you're good.
Yep. So this morning you talked a little bit about AI usage in retail industry. There were some interesting sort of articles sort of around the web about how AI is being used in retail. I thought one of the interesting ones was a Wall Street Journal article that talked about there's a retailer trying to get more AI into inventory, and so this seems like, just to me, a really good use case for AI. I mean, we hear so much about AI taking people's jobs, but this could actually maybe enhance people's ability to do their job. So they're talking in this article about using AI to manage inventory levels. They cited Walmart and Walgreens specifically, and the idea is to maybe eschew historical sales trends, because those only tell you so much about what's going to come up, and really incorporate more sort of real-time data. And so some things like weather, which has a big impact on how much people shop, what they buy. I mean, just foot traffic, it has a big impact on, and impulse purchases, all those things. And then the other thing that it seems to be even a bigger deal is the social media attention, where really it's difficult to predict what sales of any sort of item is going to be, because they're so influenced by whether certain social media personalities come out positively on them or not when they review them. And that's has to go with when they launch, but then also just sort of this time of year, someone puts out a list of the top Christmas items for a particular person, that can all of a sudden create a shortage of a certain item, or maybe this person has a better following in certain regions of the country that causes a shortage of this item in a certain region of the country. And it seems like this is getting to be a bigger deal with, for instance, like Amazon making its marketplace sellers, have a regional distribution model instead of a national distribution model. And it seems like this is pretty related to a lot of what we talk about on a regular basis in freight transportation, and a couple of ways that this can kind of manifest as we've seen over the past several years. I have a sonar chart on this, that domestic intermodal containers, you see this white line. This is just sort of a relative chart, but in the past 5 years, you look at from middle of 2019 to now, domestic intermodal actually 12% higher in this past week. There's some seasonality in there, so it's a seasonally strong period of the year. So if you exclude that, maybe it's a 5%. But domestic intermodal has taken some share from international intermodal. If you consider those being part of the same market, I sort of think of them being two different markets. And part of the reason for that is a lot of those goods that go in domestic intermodal are imports that get transloaded from international containers into domestic containers. And so you can make the decision of where those items are going closer to the point, time when those items are consumed. Similar situation when you look at sort of the West Coast ports versus the East Coast ports, where the West Coast ports, a faster way to get items from China to the US by a good 2-3 weeks versus all water route to the East Coast ports. That helps you to incorporate some of what a social media influencer might say, and direct those items accordingly. But do you have any other examples of how that sort of works its way into the transportation networks?
Just in general, I think it's interesting to see how we are pulling data from different areas. I mean, you touched on the weather aspect too. I think that's going to be kind of a big one. But yes, the social media aspect, knowing uh, exactly which influencers have more leverage, it means that when that purchase wants to be made, and as someone who's bought stuff, just seeing someone else review it and immediately clicking that button, if it's not in stock or if it can't deliver in a few days, then especially around a holiday season, right, where we have like these deadlines of when we want to get stuff in, and some of that could even be before Christmas, depending on when your family holiday events are happening. I think this inventory question of becoming more regional and these like more micro fulfillment systems are going to become huge. In my view, right, like I write a lot about technology in the space. I'm really excited to watch into this next year. Maybe some more of these companies like Pop Capacity, or these different companies that find availability in warehouses throughout the domestic US, because I think we're going to see more and more of this like regional fulfillment system come up. You mentioned Amazon, you mentioned a couple players that are, of course, adding that as a requirement to their marketplace. Again, we talked, I think, last week, right, about like waiting to see what the data looks like for how long a lot of these hauls are over the holiday season as well. Because I think as long as we can have a better picture or make better forecasting choices with our inventory, I think there's going to be a lot more pressure on these more regional moves and the carriers that move these lanes as well. So, yeah, I think it's going to be something even bigger that we see in 2024. I think it's coming into practice more now, right? Like, I think when we hear earnings calls for this last quarter next year, this micro fulfillment type of or regional fulfillment system is going to be more talked about in those calls than we've heard in the past.
Yeah, for sure. Yeah, I did find the article I was referring to earlier is the DAT has, in single quotes, zero tolerance for fraud. So we'll hear, that was on Friday, not over the weekend. So I got that wrong.
Yeah.
And then we'll hear more about that topic, later on. But also wanted to give, shout out to an upcoming webinar that we have titled "How Enterprise Companies Are Using AI to Drive Cost Efficiency Within Truckload Programs." Again, presented by Flock Freight. Joe from our team is going to be moderating that. So I think this is a relevant one for, the intended audience of this call, which is the shipper community. I also want to touch on, a couple other things here. You mentioned on FreightWaves Now this morning, retailers face lawsuits over the AI chatbots. This is something that I think is interesting. I mean, even just preparing for this call, went to first TriumphPay website and then went to Trax website. Our guests came from Trax, and then there they had a chat bot. And at least there it was like clear that it was a chat bot because it had like an icon of a robot. But so what do you think is ultimately going to happen there in one line? You think they're just going to be required to disclose that you are in fact speaking to a robot? Is that sort of the punchline?
Yeah, I think they'll be required, but I honestly think the consumer will demand it before even the requirement. That's a big part of these issues, is that people are giving their maybe a little bit more of their personal data up to these chatbots, but because they're becoming so intelligent, they feel like they're giving that to a human instead of giving that to a chat box. And so I think that level of transparency and saying, hey, right now you're talking to a robot, so we'll move you over to a customer service rep, is going to become huge. I talked about this morning, recently had to do a return to Amazon, and it was kind of, long story short, I screwed it up. I put 2 items in one box, but in order to talk to someone about that, right, they have first the robot that you talk to, and then you actually set up a phone call for a human rep to call you directly. So I think that shows you, right, the importance of making sure the consumer knows kind of where they are in that level of customer support. But on the other side of it, I think there will be some regulatory aspect added to it, because there's going to be, I think, a lot of companies across all industries using these chatbots. They are going to be requesting specific information. I found it really interesting. California has this kind of cancel type of regulation where it's kind of like clearing your browser history, like your ability to delete everything with that company. I mean, that's huge. We all know here at FreightWaves the importance of data and what companies can do with data if they get their hands on it. And here it's positive, but some places they could be leveraging that or selling that even in a different way. So, even everyone who's in our space who's looking to add chatbots or some type of automated customer service, make sure when you're learning from those technologies or looking to buy one of those, that you do have that discussion a little bit deeper on the privacy side of things, who's getting that info, how they're leveraging that within their total business, and also if they're watching out for these regulations as well.
Yeah, it seems like the logistics should be sophisticated enough. You can put two things in the same box. Seems like
Yeah.
hopefully someday we'll get to that point. I just want to hit on a couple of sort of macroeconomic items I think are relevant. I mean, we had some good feedback from the last session that we did on Black Friday sales. A couple of other data points came out since then. One is that October consumer spending rose 0.2% from September. That was down from a 0.7% rise. So seeing some deceleration there. Savings rate only 3.8%. So sort of suggests the consumer maybe pulling back just a little bit, given the seasonality. And then you're also seeing inflation cooling, which I think was a big part of maybe the primary reason why stock market was surging last week and had such a good month. Is CPI in October rose 3% from a year earlier. So closing in on Fed's target of 2%. And then you look at core CPI rose 0.2% in October from September, and that's up 3.5% from a year ago. So for CPG companies, I mean, I think this goes to what we've talked about before, which is the retailers going to put more pressure on the CPG companies to reduce prices. You've seen that come down in a lot of the fresher food categories, the one where it's a little bit more of a pass through of commodity cost, whereas the packaged goods, still those prices are at elevated levels. But it seemed to suggest from Walmart's latest earnings transcript that they have negotiated lower prices on a lot of those products, and they just haven't hit shelves yet because those contracts haven't rolled over yet. So with that is a little bit of macro news. I think we should get into introing today's guest, who is Josh Bouk. He's the Chief Partnership Officer of TriumphPay. Good to see you, Josh.
Mike, thanks for having me. It's great to see you. Grace, nice to talk to you again. It's good to see you.
I know. Happy to talk with you too. Thank you so much for joining us on the show. And hey, to start this off, let's for our audience who does know who TriumphPay is, which catch up if you don't. Let's give them a little overview of what you're doing for our industry.
Yeah, I'm happy to. So, at the highest level, TriumphPay is the payments network for global logistics. We facilitate frictionless settlement of logistics invoices for shippers, for brokers, for 4PLs and carriers and factors. And while doing that, we're identifying and eliminating fraud within the logistics industry. So the easiest way to think about us is we're the Visa of global logistics. We're also a member of the Triumph financial family, which means that we're publicly traded, we're regulated, we're a financial institution that's a member of the FDIC. And because we have visibility to nearly 50 billion in freight, and we pay over 280,000 carriers each year, we have tremendous visibility into the movement of goods in North America in particular. How's that?
Yeah, I wanted to maybe ask you for an insight or two, just based on that visibility. When you see so many payments, you're probably the first to see when the volume of transactions increases or decreases. Kind of what are you seeing in the marketplace right now? It's traditionally a busy time for shipping items. What are you seeing?
Yeah, Mike, I mean, you just touched on it a minute ago. The big news was that online spending for Black Friday was 9.8 billion, up 7.5% from last year. It's a record again. That's fantastic. Except what's behind that, right? That first of all, it's only online spending. Is that really a sign of economic health, or is it just a sign of consumer patterns on where they buy, but not necessarily how much they buy or how strong the consumer is right now? What we do is we look at what the trucking industry in particular can tell us. And every single year since I've been in logistics, I'd be curious, Grace, what you think, but since we've been doing this, we've seen seasonal sales increases in retail and CPG drive increased prices for over-the-road freight moves, right? Trucking rates always go up this time of year. And that's due to primarily just increased loads without increased capacity. This year, prices have bumped up and down for the last 6 or 7 months, but are largely consistent. No material increases. At the same time, we're seeing tender rejection rates that are only a very small increase over the past 2 months and are still less than 50% of what we would expect from a healthy seasonal market this time of year. And yet we know, because we're making all these payments, we know that, and we can see that there's been modest capacity attrition in the trucking space over the past few months. As the freight market continues to struggle, rates continue to be low, and some carriers and drivers are just parking their trucks. And so what I would tell you is, while it's maybe a slight oversimplification, because trucking capacity is reduced, but pricing hasn't increased, it suggests that overall demand, load volume, hasn't increased like it normally would during this season. And that, to me, is a significant area of concern for the retail sector.
I want to follow up on the answer as well, because I've actually have a pretty long relationship with TriumphPay and some of the businesses I've been in as well, and a big fan. But what's unique about your business is that not only do you get to see the carrier side of things, but the brokerage side of things too. How is that everything that you just stated trickling into what you're seeing in brokerage at this time as well?
Well, I mean, I think it's no secret that we've seen brokers that have struggled in this period. We've seen some that have done very well. A lot of the brokers that have invested in their businesses for a long period of time, but with good, stable profitability all along the way, are doing excellent right now. But we've seen, as has been well covered in FreightWaves, we've seen maybe some that got ahead of themselves in their business models, didn't focus entirely on profitability and maintaining margins the way they needed to, and those have obviously struggled. The way we look at it for the next 18 months, we see that just continuing. We certainly see that there will be a rebound, whether that's 6 months, 12 months, 18 months. Our money is on probably 12 months before we see material increases in freight rates. And so for us, I think if you're a broker, it's going to continue to be time to stay the course, manage margins, do good, work, take good business, and then manage your costs. And for those that do that, I think they're going to come out just fine.
Yeah, so a shipper listening to that, is thinking, well, it'll be another easy year if I'm a logistics manager, right? I mean, don't have to worry about tight market another 12 months. What advice would you be giving them? And is there a way to use for them to use your service to stamp out, fraud or other areas?
Yeah, I mean, especially in the retail and CPG side, what we're seeing over the last few months is a shipper that is saying, look, it may not be a great time for us right now either, right? We may struggle a bit too, but there will be a rebound in consumer behavior. The overall economy will rebound and will grow. And so those that are thinking about that in the context of that's going to be in 6, 12, 18 months, they're making moves now in order to take advantage of that when that time comes. And so the biggest focus that I see them having these days is really focusing on working capital. Shippers, particularly retailers, are starting to really take a hard look at how do we maximize working capital right now so that we can make the investments now that will help us gain competitive advantage over the next 12 to 18 months. And so what's changed, though, is when let's go back to early 2020 when money was effectively free, right? If people wanted to expand working capital, they'd just go to their bank and they'd borrow more money. Today, because rates are so high, because interest rates are high, and we don't expect material degradation of those rates over the next year, companies are turning to programs like supply chain finance, and they're looking to extend supplier terms to be able to increase their own working capital. And we're seeing frankly, we're seeing a lot of that right now with companies that are going to RFP. You could use the term pressing their leverage. I wouldn't use it myself, but some people might. But they're issuing RFPs for logistics services that are demanding 90 days, 120 days. We've even seen 150-day terms being demanded by shippers to their logistics service providers. And that just hasn't happened before. Historically, the LSPs had enough leverage in the relationship that they could just simply decline. They would reject those programs. And so this is where we find our opportunity to step in. TriumphPay comes into the middle of that, where relationships are tense, where the shipper wants to take longer to pay and optimize their working capital, which is a good business move for them. It's smart for them. But the LSP is in a very cash intensive business. We all know that. They need the capital now. And so TriumphPay comes into that, and we automate the settlement of the invoices. So first and foremost, let's get all the bad data out of the way, all of the paper. Let's connect the systems so that we can create frictionless payments. That makes everyone more efficient. We then identify and prevent fraudulent transactions, making everyone safer. But the last thing we do is we inject our balance sheet into the settlement and payment process to help both sides, the shipper and the LSP, so that the shipper can take as long as they want to pay, and yet the LSP can get paid when they need to be able to continue to make deliver good service. And that's really the focus of TriumphPay: is automation, fraud prevention, and supply chain finance that helps everybody manage this challenging environment in a better, more collaborative manner.
I love that, and to piggyback off of that, clearly being in partnerships, Josh, you touched on fraud being a huge aspect of what you're doing behind the scenes at TriumphPay. I mean, especially talk about CPG and retail, probably two of the biggest industries that fraud is looking to attack. Can you talk about the partnerships that you've been working on to prevent fraud in the future, and really how that is going to continue into 24 as well?
So it's pretty public knowledge that we've got a great relationship with our friends at Highway. I think the last article I saw from FreightWaves said that double brokering in particular is somewhere in the $500 million to $700 million range. We think you undershot it, to be very honest. We think that there's a whole lot more than that isn't detected. And this is what that partnership is allowing us to root out. We're between the data that we have across nearly 300,000 carriers at this point, knowing how they get paid, what accounts are theirs, really understanding account ownership and who they are, the identity, and then connecting with Highway and being able to understand also what equipment they have. We can figure out programmatically whether we're seeing a broker who's clearly has the capacity and is able to deliver that freight using their equipment, the carrier that's doing the same, or that carrier has taken 10 loads and they have 3 power units, right? And so we're able to identify those issues and bring them to the shipper or bring them to the broker and say, hey, something's going on here that we need to address together. That relationship is fantastic. It's growing and is going to continue. We do have some other partnerships that are in the works that will allow us to provide an increased level of transparency and visibility in the industry in certain areas of data. But those are coming soon, and we'll have more information on that in the new year.
Yeah, that's exactly what I was about to ask you. It's just about your role, and Grace can verify that because you see we're in the shared document. But I wanted to ask you about your role as Chief Partnerships Officer. I mean, you did the partnership with Highway, you did one with HubTrans to sort of expand your capabilities. Is there anything you can say about sort of the direction you're taking the company by expanding your partnership reach?
Well, HubTran we bought, so that is now part of TriumphPay and has been for the last couple of years, and that represents our audit solution for our broker community. As I mentioned, our partnership with Highway is fantastic. We do have partnerships on the shipper side with companies like E2Open, Oracle TMS, Trax, and Intelligent Audit. And those partnerships are all meant to deliver a integrated experience from TMS to freight audit to payment for our mutual shipper customers. And so there'll be more of that coming into next year. And then overall, from a partnership standpoint, we view the TMS community as a pretty broad spectrum of carrier TMSs, broker and 4PL TMSs and shipper TMSs, and those that play in multiple categories, of course. But what we're trying to do within the network is to create stitching that allows those TMSs to submit data in, whether you're a payor TMS or whether you're a payee TMS or an ERP system that's looking to either pay invoices or expense invoices on the payor side. We're able to connect that data, eliminate a lot of the paper that's happening in the industry that has happened for 100 years, and be able to stitch together a frictionless transaction throughout. And when you see that transaction go from order to pay with zero paper, that's when we know that we've been successful.
I love that. Again, love watching TriumphPay grow. Was a big fan of the HubTran back in the day. Was as a customer waiting for that acquisition. So happy to see what you've grown from that as well. And Josh, thank you so much for coming on the show. It sounds like we'll have some amazing articles to work on into 2024 and the work that you're doing too. And for our audience out there, make sure that you go and subscribe to our newsletter if you haven't already. Top of the page at freightwaves.com, click on newsletters, and make sure you join our community there. Make sure you like this video, subscribe, of course, to our YouTube channel as well, and we'll be back next week with some more content.